Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. The realty sector saw a strong revival in 2024 with sales and development being driven by pretty strong demand across categories. Now, if you are looking to buy a new home or if you're looking to invest in property this year, then this particular episode is just for you. We have with us Anuj Puri of ANAROCK and Ravi Shankar Singh of Colliers, India, to help us decipher how to look at real estate as an asset class, as an investment avenue in 2025, and of course, how to get ready to get our dream home if that's what you're after this year. Thank you very much, gentlemen, for joining in. Of course, the year is still young, and I hope 2025 is off to a good start for both of you. So I want to start with sort of getting a broad brush idea of trends. We know that the realty upcycle is continuing pretty strong. Where are we in the cycle and what can we expect, broadly speaking, this year? Anuj, let's open the floor with you.
So first of all, it's always a pleasure to be on your show, Surabhi. So thank you for having us. Realty sector is doing exceptionally well. I haven't in the last 30 years seen this kind of a rally. It's been going on, for the last 3 or 4 years, beautifully. Looks like the sun, moon, stars, earth, truth, everything is aligned. Across all the segments of the realty sector, whether it's residential, which is nearly 85% of the Indian real estate market, whether it's offices, retail, data center, industrial, logistics, across the board. And more so, I would say, is residential in the sort of during COVID and post-COVID scenario, doing exceptionally well on all parameters. The consolidation and maturity has led itself to increased sales. And the second is that the increase in the prices have meant is that better quality products are coming in from very mature, consolidated, largely listed developers. So to answer your question, fantastic time. Haven't seen it in the last 30 years, such times when all segments of the real estate are fully aligned and firing all 4 cylinders.
Well, it's the post-COVID boom as life has gotten back to normal. I take that point, Anuj. Ravi, your thoughts, opening views, and if you could also throw in some numbers, just so that we have a sense of what has been the absorption, what are the pricing trends. How do you sum up where we are in the real estate cycle overall? Ravi?
Surabhi, thanks for having me. It's literally been a bull run, like Anuj rightly says. And post 21, 22, we have literally seen all markets almost double in terms of pricing. Compared to last year, 23 to 24, the increase has been a little subdued. I would say about 10 to 12% what we have witnessed so far. I think the pricing is going to hold going forward. But exciting times. What encourages me is bulk of the demand is coming from end use. People are actually looking to buy homes to live in them rather than just looking at it as an investment product.
I'm glad you mentioned that, Ravi, because sometimes, and I guess that's what happens when you've been doing this for a long time. Because when I hear the announcements of flats sold in one day, or demand was so high that inventory was taken up in like a couple of hours, and flats for 5 CR, 7 CR were all taken up. Sometimes the journalist in me worries whether we are starting some sort of a period of excesses or not. But Anuj, I know your firm has been tracking a lot of data, and I was going through your notes, which is telling us how I think the supply and the demand are kind of keeping up. The absorption is pretty good. So do run us through the numbers and tell us if you're at all worried from that standpoint now.
So first of all, Surabhi, being on your show, I'll let out a secret. So, you're right, it does worry when you see, sales of 500 crores, 700 crores, 1,000 crores in a single day. That is happening. And then you worry, are these speculators, are these investors? Because unlikely that an end user can, immediately come in and write a check. So it is a valid concern, but I'm going to let a trick out here on your show. Actually, there is a lot of work done by the developers before they say is that, today is the launch. in many cases, Surabhi, the checks are already picked up.
Yeah.
That is the day when they bank the check.
Yeah.
So actually,
Yeah.
it's 8 to 10 weeks of work. So literally 2.5 months work is done with the end users, and over that period of time, those checks are picked up and they're actually banked on a particular day. And that's when the news comes out that you've had this kind of a sale. So rest be assured, what Ravi is saying is that this demand is coming in largely from the end users. I would also say is some part investors that have started, but not speculators. And investors, I'm actually quite okay, Surbi, for investors to come in because these are long-term investors who are holding it, either for income yield on the office or for capital appreciation on the residential. To answer the second part of your question is that how the numbers have been is so 2024 has been a delightful year. About 5,50,000 crores worth of new inventory was sold in the top 8 cities. So fantastic from that perspective. I would say about 45% of that, Surbi, is just MMR. So MMR is like very instrumental in being able to drive, the bull run. As Ravi put it, we're seeing on the residential side nearly 45% sales coming in from MMR, followed by NCR and then Bangalore. Between these 3 cities, about 70% of the new home sales that you see in the top 8 metro cities comes in. The balance 5 cities actually produce 30% of the new home sales. Now, going into 2025, we're hoping that this bull run, continues. Although we'll see is that what the sentiment stacks up with the stock market, coming down. But I do feel is that where the solid delivery from the developers is coming in, and you also mentioned about the inventory and the supply that is coming in, we're very well poised because there is very little excess inventory in any of these cities. So in a way, my concern, if you were to ask Surbi, is that I need supply to come in far more quicker than what it has been coming up. Because if it doesn't and demand continues to remain the same, we run the risk of prices going up very quickly. So
Yeah.
unsold inventory at its almost historic low,
Sure.
sales at its historic high in 2024. As we step into 2025, I do feel the momentum will continue, but I do want more supply to come in from tier one developers.
Okay, fair point. That you don't seem too perturbed about this, about the whole demand supply situation. Anuj is saying it's fairly evenly balanced at this point in time. But gentlemen, I want to now come to the key question for anyone who's watching the show is that, is this a good time to buy my dream home? I know both of you will say that any time is a good time if it's a home that you want to buy to stay in. But still, there are two key factors that people look at, right? One is pricing. And you have to take that into consideration to decide, your cash flows, etc. And the second is obviously the rate cycle, interest rate cycles. So I want to get your views on both. Because the expectation is that gradually over the course of this year, we will be in a lower interest rate regime. So Ravi, come in on this. First of all, on pricing. Now, I'm talking about someone who's looking to buy a home for end use, either the person himself or herself or their family. Is this the right time and how should one go about it?
Surbi, we have seen a tremendous price rise in the last 3 years. And I personally feel the price is here to stay. And in my 20 years in real estate, I really haven't seen real estate prices come down. So, what a consumer should look at now is, how most cost effectively he can acquire real estate. And I think largely that is going to be backed by new deferred payment plans, which the developers are looking to launch in time to come. Uh, Coming to interest rates, we are seeing it soften across the globe, and today most financial institutions are operating on a variable rate of interest. So as and when how the market behaves, the interest rates are adjusted accordingly. So if you are my suggestion, if you're looking to buy, uh, there is never a wrong time. You should go ahead and just to add to what Anuj was mentioning earlier, We have a huge demand for real estate in India, especially residential. And when I say that, if we look at top 8 cities in India today, we are selling close to about 5 to 6 lakh units a year. And if I look at some of the developed countries in the world, UK today sells about 4.5 million units every year at one third the population base. China at its peak was selling 9 million 9 million homes every year.
Hmm.
So that is the quantum of sales we can look at getting into. And Anuj, the way he has said it, we need more supply coming into the market for people to actually go out and execute transactions.
Yeah, no, absolutely. The problem with some of the markets, for instance, probably Mumbai, is that 5 is the new 2 and 10 is the new 5, where you thought, okay, if you can stretch a budget for about 2 CR, you'll get a decent house in the MMR region. Now I think those numbers are just going up, which brings me to a viewer question, Anuj, and this one's going to be for you. It is on pricing and on buying that house. The query is from Sagar Bhanushali. He's written in to us on Instagram. He is saying, if it's feasible to buy a property in Mumbai at current prices, would it be a decent investment as well, along with, of course, an option to live in? Anuj, the Mumbai market, what do you see ahead? And give us some numbers here, because like I'm saying, the numbers for the massive affluent are also getting a little baffling.
Yeah. So Sagar, it is possible to buy in Mumbai. And I must also say is that maybe 10 years ago, it was difficult to buy in Mumbai. Actually, over the last 10 years, Surabhi, contrary to the thought that the prices have only sort of just gone up and it's becoming unaffordable, uh, Mumbai has become more affordable. And the reason is that there is better quality infrastructure that has been put in. As a result of which, the very far flung areas have got superbly connected with the CBDs. If you were to talk about Navi Mumbai, Panvel, Dombivli, Kalyan, Surabhi, there you are going to be able to get in good quality home from a very reputed developer at 40, 50 lakh rupees. So, if you were to ask me 10 years ago, would you be able to get in a house of 40, 50 lakhs? I would say it'll be very difficult. Yes, you can, but it'll be more like in Karjar. And you wouldn't be able to commute every day coming into the workplace. Today, I would say there are several areas that you'll be able to get in a one bedroom, you'll be able to get a studio in an integrated sort of township development, which will have facilities, which will have better quality infrastructure within the township, and which will be well connected to your place of work. So, Sagar, it is possible to be able to own your dream home in Bombay better than what it would have been 10 years ago, of a good quality developer, well connected. If you are asking me as an investment, I'm not sure that you're going to see that kind of price appreciation in residential going from here onwards. So, as an investor, unless you're going to be long term, Sagar, then you may wish to hold it up. But if you're looking at a speculator short term, then I would suggest is do not enter the market, because I don't see price appreciation of double digits. Ravi's right is that price will not come down, will go up as per the inflation rate. But it is not a product that I would should be recommend that this should attract investors. It is a product certainly on the residential. When we talk about commercial, it may be a different view. But on the residential, it's a product which is really for the end users and not really as much for the investors.
Okay, that's interesting. And so there you go. Perhaps Mumbai real estate, residential real estate, more for end users, not so much for speculators and investors. However, are there some other investment opportunities in real estate? That's what we'll discuss after a quick break.
Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this week it's all about real estate. Should you look at this asset class from an investment perspective in 2025 and, of course, beyond? We are in conversation with Anuj Puri of ANAROCK, as well as we have the experts here from Colliers India, joining in. So let's, gentlemen, go on to talk about, for the investor, what does real estate have in store? Before I want to come to your picks and choices, let's just put some ground rules in place. What all should investors keep in mind before they're taking that call on real estate, where obviously the capital values could be a lot higher? Ravi?
Uh, I think the commercial side of real estate offers better opportunities, Survey. And we have seen the maximum absorption in office and warehousing in the last 2 years. So going forward, I think that's the more lucrative option that we should evaluate when it comes to investments. And with that, the investment opportunity has quite become regularized with REITs and micro REITs coming in. So people should evaluate those options which are now regularized by SEBI and look at the commercial side of real estate for investment purpose.
Okay, so we'll talk a little more about that in more detail, commercial real estate. But Anuj as well, again, I go back to first setting some ground rules in place. And let me actually throw in residential as well. I mean, there are a lot of people who want to buy residential property as an investment as well. So whether it is a small ticket commercial or residential or maybe REITs, whatever form of, whatever the instrument or the physical asset might be, what are the key rules that you should keep in mind or the key things you should ask or check before making a real estate investment?
Absolutely, Surabhi. So I would say there are lots of them, but I will classify it in three main buckets. First is when do you want this liquidity? If you are looking at a short term to say, look, I have some excess money, I'm going to park it over the next 6 months, 9 months, 12 months, I may need this money back, then I would say is hard asset within real estate, complete no. It is an illiquid asset. It has a lot of friction costs in terms of brokerage, stamp duty, registration. So I would suggest is then don't go for that. And if you do want to still play into real estate, then it is more like REITs that you do it, or more like getting into the shares of listed developers. The second is what is the quantum that you have is if you have a larger quantum and you want to play hard real estate asset, then I would say commercial. If you have smaller quantum, and by larger I mean is like the ultra high net worth individuals, 10 crore plus. But if you have smaller, you may say is I want to do 40, 50, 60 lakh rupees, then plotted developments. I would encourage you to have a look at it. And the third is, are you playing this real estate investment game for capital appreciation or for rental return? If it is capital appreciation, then I would say is it will be more towards the residential. If it is a rental income that you're really looking at it, then I will say is on the hard asset, it will be more for commercial and more for retail. So that is the three things that one should look at it. What is the criteria? Capital appreciation, rental appreciation, liquidity. What's the horizon for the liquidity, and what is the quantum that you're wanting to invest?
Okay, both of you mentioned REITs as a vehicle to also obviously play the real estate story. We have a question on this. This query is coming in from one of our viewers, Sam, who writes in on social media. He's saying, is fractional ownership in commercial real estate units a prudent and viable investment option? Great question there, and I think both our guests are indicating that you could look at this. So let me ask them about it. Ravi, come in on this. Now, instead of just pure REITs, you also have the small and medium REITs, right? So just quickly run us through what has changed, what is the entry barrier, what is the minimum investment, and if this is a way to play maybe commercial real estate.
Surabhi, REITs earlier had a cap of 500 crores, okay, which the government has now reduced to 50 crores. And, now it's targeted at ready assets, which are going to, which will have rental yields going forward. And the minimum investment for these small and medium REIT is an entry investment of 10 lakh rupees. Okay, so it is a slightly higher yielding asset class than the traditional REIT, because it has ready to occupy assets under operations. Whereas REITs, you have you have assets which are in acquisition as well and in development. So it's being a smaller size, it is slightly more riskier than traditional REIT, but at the same time offers a slightly higher return.
Anuj, quickly comment on this and also tell us, so like Ravi mentioned, the minimum threshold, the minimum you need to invest as a retail investor is 10 lakh rupees. What is the kind of return I can expect if I get into a small and medium REIT, and what's the risk I'm running?
So, small and medium REITs have just come in, Surabhi. So it is less than 12 months ago that SEBI allowed. I think there are one or two of them that have come into the play now. It is an interesting concept, as Ravi said. I'm still a big fan of the bigger REITs, the larger REITs. I do feel they have a lot more stability. They have diversity as well, Surabhi, of the cities. They have larger portfolios. They have also got larger REIT managers who have ability to be able to lease, some of these buildings. Having said that, the SM REIT is a new phenomena. We will see is that how this plays out over the next few years. It is true, is what Ravi said, is that it can list one single asset of up to 500 crores, as a result of which, if you want to subscribe to units of lesser value, then SM REIT does offer that. Usually, SM REIT provides a higher return than the main board REIT, and the returns are in the range of 8 to 9%, just
8
on
to
the
9%.
8 to 9% dividend. But there is a capital appreciation as well that you will get at the time of the exit.
Gentlemen, I'm very sure next couple of weeks or maybe a little later down the year, I'm calling both of you back on, because we need a full classroom on this new, asset class, this new option of the small and medium REITs. We need to understand the dynamics more closely. But for now, before we wrap up, this is a quick last, 10 seconds answer. You both said that residential real estate for end use now is as good a time as any to buy your dream home. But from an investment perspective, if you were to say, and take a pick, any pick across India, any market, whether it could be land, commercial, give us the specifics. Which city, what kind of, product? Ravi, which one would you go with? The best real estate investment for 2025?
I would still go with Bangalore.
And what in Bangalore?
There is lots of opportunities. Like Anuj had mentioned earlier, I could look at plots. I could look at, because the infrastructure development in the city is so huge, and it is going to show its color in the next 3 to 4 years. Okay, so I would evaluate connectivity to CBDs, and I would have a strategy around the future development for my
Bangalore. Bangalore gets your top billing. Anuj, final word with you. Best investment idea, real estate 2025.
It's a tough question to answer, Surabhi. I'll go with Bombay, Navi Mumbai. I just believe is that the MTHL, the new airport, the social fabric, the CBD, which is relocating there. I mean, it's a good opportunity for one to invest.
Whether land there, commercial, residential, what within new, Navi Mumbai?
I would do residential apartments within Navi Mumbai and wait till the new airport sets up and enjoy the capital appreciation.
Well. Now, that's a thought that our viewers are definitely going to keep in mind and do some more homework on. Thank you, gentlemen, very much. This was a good session, a very, very useful and helpful one to help our viewers decipher how they can look at real estate in this new year. Thanks for joining in. Well, with that, we're completely out of time. Thank you very much for tuning in. Keep sending us your response, feedback, queries, all of that and more. We'll see you again with a brand new theme. Let's Talk Money. Always here, same time, same place.
Let's Talk Money